Sehr geehrte
Ladies and gentlemen, by way of exception, I'm the one to welcome you this morning to our mid-year presentation. It's me this time because Wienerberger is a business that goes through changes, numerous changes, and I'd like to point out to you that there's been a change also in investor relations, and I'd like to ask Klaus and Barbara to say a few words. Thank you, Heimo. Klaus Ofner took over the investor relations department not long ago. He's head of investor relations at Wienerberger, and he's going to be your main contact in the future. I myself will take over corporate communications, including internal communication and sustainability. But this does not mean that we're not going to meet in the future. I'm sure there will be occasions at various events for us to meet again. But as of today, I'd like to thank you for your cooperation over the past few years. And as I said, I hope to see you again soon. A cordial welcome also from my part. I'm Klaus Ofner. I've been on Barbara's team for 2.5 years. Now I will be heading this team. I used to be an analyst at Raiffeisen Central Bank, so I do know the other side and know its concerns, and I will try and maintain the high level of quality, and I look forward to cooperating with you in the future. And I will be at your disposal whenever you have any requests, suggestions for changes or whatever. Thank you very much, Klaus. Max will be supporting Klaus on his team. It's a small and efficient team. So that is our investor relations crew. So, a cordial welcome to all of you on behalf of Wienerberger and also on behalf of Willy van Riet, my colleague on the managing board. We would like to walk you through the first half of 2013 and also give you an outlook to the full year. In a very difficult and challenging market environment, we've been able to restructure Wienerberger substantively. In a challenging environment, due to market conditions and to economic conditions, we have turned a company that used to be focused solely on bricks into a company that has two strong industrial pillars. Bricks and roof tiles on the one hand, accounting for 52% of our revenues, and pipes and pavers accounting for almost 40% of revenues. We are happy to report that this restructuring has been a consistent process which has been running smoothly. We have a small and efficient team in our holding company and strong operational divisions. We have Bricks and Tiles Europe and North America. So Wienerberger in 2013 is quite different from Wienerberger was a couple of years ago. We have a broader and a stronger and more future-oriented industrial base. During the first 6 months, through the consolidation of Pipelife, our revenues have gone up dramatically from just under 200 million to almost 500 million through the inclusion of Pipelife. EBITDA increased from 17 to 46 million. This is a highly satisfactory development. So the contribution which we expected from Pipelife has come in the amount of 31 million. Given the difficult market conditions in Europe. This is quite remarkable. Pipelife suffered from a weak Dutch market, a weak French market, but in Pipelife, this has been compensated for through a broader product portfolio, including international project business in a variety of applications, including electronic applications. So you can see very well that Pipelife has a broad basis and is not exposed so much to cyclical developments in residential housing construction. Steinzeig Keramo, the world market leader in ceramic sewer pipes, suffered from a difficult start into the year. Germany, Poland, the Benelux countries were weak, but in the second quarter, volumes picked up again, and we are confident that we can reach our target in this segment. Of course, projects were delayed because of a wet and cold start into the year. Semmelrock, the market leader in the field of concrete pavers in Central and Eastern Europe, we had to cut costs significantly. Revenues were going down because of the poor economic conditions in core markets like the Czech Republic, Poland, and Slovakia. And cost-cutting measures resulted in an improved result this year, so we are highly satisfied. We have a good management that is working consistently on the implementation of our plans, and I'm sure the full year results will be even better. A difficult start into the year, as I said. Well, after almost 3 weeks of a heat wave in Vienna, it seems strange to talk about a long, harsh, and cold winter, but that's what we had. Therefore, our EBITDA is 20 million lower than we had forecast. In the second quarter, we had the flooding. Germany, Austria, and Czech Republic suffered in particular, but the manufacturing industry was not able to build up capacities in Western Europe. There was too much uncertainty for people to invest in the future. So no real catching up effect in the second quarter. But we've seen a stabilization of business, and we're back to a normal level in all our markets in the brick segment in Europe. Prices are an important issue because we, according to target, we increased our prices in Western Europe. We were able to compensate for our cost inflation. In Eastern Europe, for strategic reasons, we opted for another price strategy. Our efficient network of plants and sites is to be used to the best of our advantage, and clay blocks have been more or less stable. In Eastern Europe, we were able to gain market shares because we reduced prices. So we've succeeded in improving our position in the individual markets. We found this important because in Eastern Europe, we want to position ourselves on a sustainable basis as the producer of clay blocks. And we want to bring about a certain amount of consolidation in that market. Our savings program for bricks and tiles in Europe is on track, focused on France, Belgium, the Netherlands, and Germany. We've taken all the measures we considered necessary in order to improve our results and to make our efficient structures even leaner and stronger. The savings made in the first half of the year are approximately 9 million. We are targeting 18 million for the full year. As regards the development of volumes and prices, Western Europe volumes have gone down. Billy will say more about that. The essential thing, the important thing in Western Europe is our strong roof business, clay roof tiles. We are the clear market leader in Western Europe. And due to the difficult market situation and also due to climatic conditions, when it's cold and wet, when it's raining, work on the roof can't go on. This is why our volume suffered, and this had an impact on the roof tile business, which generally is a high yield, a high margin business. So volumes have gone down, but prices have gone up. We do have a positive price component there. In Eastern Europe, the volume is stable, prices tend downwards. But again, that is a decision taken by us consciously as the management of the group. North America, a positive market development, around plus 12% in new housing starts. In some regions, we're outperforming that increase. So we do have a good, sustainable growth in volumes. As you may have heard from me already, I tend to be rather reserved when I talk about North America. It's not a hockey stick upward movement, but a slow and sound movement. That's to do with the fact that the processing, the manufacturing industry, doesn't have, or the construction industry simply does not have the capacity to do all the building that would be required. Many workers in the building industry have gone back to Mexico, and it's difficult for them to come back to the United States. So industry will take a while to adjust to this new situation. In pipe life, the situation is stable. That's due to the strong industrial applications which we are supplying the world over. Prices are also stable. And Steinzeig saw a slight decline in volumes. Prices have taken a positive development. Semmelrock, a negative trend in volumes, but stable prices because of the situation in Eastern Europe. When you look at the figures, given this market situation, plus 27% in revenues due to the first-time consolidation of Pipelife, very positive. EBITDA plus 5%. Net debt almost the same as the first half of 2012. Willy is going to say more about working capital, and you will see then that this is primarily due to Pipelife, and in our basic Wienerberger business we have been doing well in terms of working capital. As far as total investments go, 43 million. That's a low figure. We've stepped on the brake because we took over Pipelife last year. This is why total investments have gone down so significantly from the high level last year. We've adjusted to mega trends to be anticipated in the future. We are a future-oriented business. The Wienerberger divisions now have a young and dynamic management. The challenges of climate change, urbanization, resource efficiency, accessible barrier-free housing, and efficiency and safety in the building segment will be taken up. We have positioned ourselves in a future-oriented manner, and we are confident that this is going to generate success for us in the years to come. In all segments, be it the wall segment, the roof segment, facades, pipes, or pavers, we have been able to implement innovations, and it's not just innovation for innovation's sake, but because we want to generate an additional benefit for the market and increase our margins. With this, I hand over to Willy, who is going to present the result. The result for the first half of 2013, plus 27% in revenues. I'll speak about volumes and prices later. Our operating EBITDA up to 106 million, including a 31 million contribution from the Pipelife consolidation. In the first half of 2012, Pipelife was fully consolidated only in June, and in 2013 for the full 6-month period. The EBITDA margin has gone down for two reasons, from 10.2 to 8.4. Pipelife is now included for 6 months, and as you know, Pipelife has a margin which is around 10%. So therefore, our margin is depressed slightly. But this lower margin is also due to the fact that the roofing business was so weak in the first half of the year in the Western European region. In the brick segment, roof tiles is a high margin business, 20% and even more. And if that is not working well, it depresses the margin. Depreciation has gone up slightly. That's due to the 5 months of Pipelife, and this leads to an EBIT of 4.9 million. The financial result, here we have two Pipelife effects. Income from investments in associates. We go from plus 2 million to minus 5 million, and this is due to the fact because last year Pipelife was included under investments in associates for the first 5 months, making a 5 million contribution for that period. So this is no longer there. This is now included in the operating result. And what remains in investments in associates is Schlagmann in Germany, a 50% participation in Bavaria, which is performing well, and Tondach Kleinstetten. And they are operating in the roof business primarily in Eastern Europe. And they suffered from unfavorable weather conditions. And we have undertaken a working capital program which goes at the expense of the operating result, but which brought our stocks down. And that is reflected in the figures. But now it's going up again for the figure. Interest and similar income lower than last year because we had the Pipelife acquisition for 6 months. Other financial results in 2012, 42 million revaluation of the Pipelife participation was included. At that time, we had a 50% participation. We bought the rest from Solveig, and our existing participation in accounting terms had to be revalued. If we adjust the figure for that, we find another financial result which is more or less stable as last year. It also includes bank charges. So we have twice a one-off effect related to Pipelife. And for the first 6 months, we have a net loss of 31 million compared with 24 million after the 42 million from Pipelife. The consolidation effect more than compensates the organic revenue decline in the old Wienerberger business. Volumes have gone down by 7% in bricks and tiles for Semmelrock and also for Steinzeug. Prices have shown a flat development across the entire product mix. The FX effect is just minus 1%, and the 35%, those are the 300 million from the Pipelife consolidation. So we had stable prices in a highly challenging environment in the first half of 2013, mainly in the brick and tiles segment. Despite the challenging environment in Western Europe, we've been talking about the winter, But, you know, I come from Belgium. For me, snow is an Austrian product, not a Belgian product. But we had snow in Belgium, in the Benelux countries, in England, in France. Those are markets that are not used to having snow. And there was absolutely no business until the second week in April, when everything started again. And then there was the flood in Germany, but also in Eastern Europe. A flood doesn't mean that construction is not happening, but logistics is made difficult, and a wet construction site in residential construction makes things impossible. So everything was delayed, as Heimo said. And we could also see that the building industry hesitated to employ new people. They just continued at the same pace, and there was no recovery effect. And the price increases we were able to implement in Western Europe in order to offset inflation was good enough. That is a remarkable and outstanding achievement in that economic environment in Western Europe. Eastern Europe, after the winter, which is something that Eastern Europe is used to, but starting in May and June, we saw a pressure on prices, and we took the offensive to benefit from our cost advantage, particularly in the wall segment. So we lowered our prices selectively for certain products and in certain markets in order to strengthen our position. And we're convinced that we have gained market shares that way, particularly in Poland and the Czech Republic. In North America, I will show you, we're going to show you a map later on. North America, we are represented particularly in the east of the continent. Prices have remained more or less stable. The only exception was one region where a competitor tried to do better than we were doing, and there was a pressure on prices, but that was the exception rather than the rule. Pipelife, for Pipelife, raw materials, that is PVC, polyethylene, account for much of their costs. And there were cost increases, but we were able to pass that on to the market. So we were consistent and flexible in our pricing policy. So our price management has been quite successful. Looking at the results by region first, and then by business units, you will see that bricks and tiles in Western Europe account for 41% of revenues. This is still the business unit with the strongest earnings, particularly if we include bricks and tiles. Bricks and tiles in Eastern Europe, 11% contribution to revenues. Pipes and pavers, Eastern Europe and Western Europe, almost 50% contribution. Of course, pipes and pavers in Western Europe, that includes Scandinavia, and Scandinavia continues to be a stable region in Europe. The situation is even clearer when we break results down by product. The wall segment accounts for 23% in revenues and 20% in EBITDA. Roof segment, 14% of revenues, 34% of EBITDA. And pipes, both plastic and ceramic pipes, 38% in revenues and 43% in EBITDA. So that confirms the balanced picture and the two main pillars of Wienerberger, which Heimo mentioned earlier. Last year, the roof segment accounted for 46% of EBITDA. Now we are in a more stable position. When I look at changes in EBITDA by segment, you can see that bricks and tiles in Western Europe lost 16%, declined by almost 10% in Eastern Europe, but increases in Western Europe and Eastern Europe in pipes and pavers, and also in North America. Cash flow development. Owing to the weak operating result, our gross cash flow is slightly weaker. And when you look at working capital compared with the same period of 2012, we have 100 million more in working capital. Where does that come from? It comes almost exclusively from Pipelife. Pipelife was consolidated as of the 1st of June last year, and the build-up of working capital during the first 5 months was included in the debt which we had to take over and which we consolidated. And we only had the movement of working capital for the month of June in our figures, and that meant a decline. So that accounts for these figures. In the organic old Wienerberger business, we had working capital well under control. But please take this as a normal change in working capital. We are a seasonal business. We have to have products on stock for the high season, which starts in May and June. And the products have to be there because otherwise we can't deliver them. A working capital swing of around 200 million is something quite normal. Of course, we're working on reducing this figure, but we know we will bring it down by the end of the year. By the end of the year, we are not going to have a negative change in working capital. So money will be coming in, and the net debt will be lower accordingly. Normal investments at the same level as the year before, despite the additional 5 months of Pipelife. It's exactly what we need for the first 6 months. Divestments and others, that is realization of non-core real estate, but also sale of machinery in line with last year. And the free cash flow suffers from the burden of working capital, as you can see, but this is a temporary charge. It will not remain for the full year. No growth investments. Last year we had Pipelife, 146 million growth investment last year, nothing this year. And the dividend payout and the hybrid coupon, the same as last year. We paid out the same dividend. We're still paying the hybrid coupon. The difference compared with last year is due to the fact that as part of the Pipelife investment, we got a 10 million dividend. So that accounts for the net cash flow development from 2012 to 2013. If we were to look at the details regarding working capital, you can see the Pipelife effect, plus 40 million in 2012, minus 75 million this year. That accounts for the figures you can see here. Change in working capital, excluding Pipelife, as you can see in the bottom line, despite the difficult situation of the markets, despite unfavorable climatic conditions. We've succeeded in further improving the working capital situation in our brick business. That's a very strong message. It's something we keep working on. It includes supply chain management and a great variety of systems, which is just in line with our expectations. Total investments, I mentioned it already. Normal capex, same as last year. In percent of depreciation, lower at 43%. We expect the same for the rest of the year. Growth investments, we had Pipelife, 146 million last year, so we invested 200 million already during the first 6 months of last year. This year, only 43 million for normal maintenance investments. And smaller projects like infill bricks, improvement of production lines, production machinery, that is included under normal capex. So normal capex is not just maintenance, but maintenance plus improvements of existing production facilities. Development of net debt over the 2 quarters. You can see the working capital swing very clearly. And in the second quarter, we've already succeeded in bringing that down. You can see how difficult the first quarter was. We had a negative gross cash flow, which was then made up for through the cash flow from the second quarter. So we still have a strong balance sheet, 800 million net debt, which is just above the net debt at the end of June 2012. And the changes between the end of last year and end of June were due to working capital movements. As you know, we issued a bond in April 2013 at a coupon of 4%. Demand was high. Maturity 7 years. That will help us balance our redemption profile. It helps us improve our redemption profile. 7 years. Over 75% of the volume was placed with international investors. So I think the market received the bond issue very well. More than 50% has been placed with institutional investors. So there is strong demand that helps us strengthen our balanced maturity structure. We have a strong liquidity base, and we've already taken care of 2014, which of course has an impact on our results. Because we have a negative carry on our cash. We are paying a coupon of 4%, and we get almost nothing for the bond. So it's a kind of prudential policy, a kind of risk provision. We probably will not do that again in the future when money is more readily available, but it's our way of preparing in a proactive manner for the future. The markets, when the markets are open, we use the occasion. That was the case in April. A month later, this was no longer the case. But we have indeed a balanced maturity structure. However, our target is to maintain financial discipline in the company. We have, as I said, a balanced redemption profile, which gives us headroom also with the covenants. You can see the 3.2. I've already been asked, is that a problem? No, it's not a problem. We know what we are doing. We had a negative winter, a very bad winter, but it's no issue. At the end of the year, net debt relative to EBITDA will be back to 2.5, because what we have now is only due to working capital and nothing else.
I'd like to take you through the different segments. Let me start with bricks, tiles, Western Europe. We've talked about that briefly. External revenues are down by 9% due to weather conditions and the fact that because of bad weather, the roof business declined. When you look at our original estimates and the actual results in the first half of the year, you will see that the Belgian, the Dutch, and the French markets were worse than we expected in terms of new housing. So summing up, the Dutch market showed a double-digit decline, almost 16-17%. You will have noticed that the Dutch economy is suffering at the moment, and particularly new housing or housing starts showed a market decline. In France, the market has stabilized at a lower level. This could be seen in the second quarter the situation in Belgium was similar, but the decrease was higher than we expected. The German market, with all the enthusiasm existing there, did not show the positive development that was originally expected because of the floods and also because of the long winter. But anyway, development was not as positive in the first half of the year as expected. So the overall development for the entire year will be positive, but growth will not be as strong as expected. A positive surprise was the British market. There was a market recovery starting at a low level, but we now see considerable growth. This is also due to measures taken by the government with the home buyer program and increase in new residential construction and volume growth. As Willy explained, management did a very good job given the market environment. It succeeded in increasing prices. Eastern Europe. Here we recognized quite early that Poland, Czech, Slovakia and Hungary would not show the development that we expected. It was expected that there would be stabilization or even a slight growth. Rather, we had a decline, or significant declines even, and here we need to differentiate. In many areas, there's no financing for family homes. There were declines then, but we recognized that. We made use of our advantages and we could sell our products. As regards our market position, we could achieve considerable growth. The Russian business showed a positive development. We could achieve high volume growth because of a very dynamic market situation. The Moscow market and the Kazan region, of course, are very important for us. What is important is that we expected a stabilization in Bulgaria and Romania at the beginning of this year, and this has actually occurred, and we believe that it will be ongoing. Pipes and pavers in Western Europe. Pipelife, of course, plays a major role. Here you see the Pipelife business, particularly in Scandinavia, as Willy pointed out. Sweden, Finland, Norway, very strong, then France and the Netherlands. And there's Steinzeug with a very strong German market and exports into the neighboring markets. Steinzeug Kermo has three production sites, four rather, Germany, Belgium, two in Germany, one in Belgium and one in the Netherlands. So this shows you the development, a positive trend. This is also reflected in the margins. I've mentioned that Pipelife, of course, also suffered from the high competition in the French market and the declining construction industry in the Netherlands. But there was a strong international project business which could compensate for that. And Pipelife is now positioned much better, has a much broader base. Eastern Europe, pipes and pavers, again, we have Pipelife and Semmelrock. Pipelife was successful in this market, even though the market environment was difficult, but it could position itself very well with good cost management and strict prices. Semmelrock, here we worked on cost reductions, and this has shown positive results in difficult market conditions. North America, here we have our American brick and tile business, the American Pipelife business, and Canadian facade business. Of course, the first half of the year was not too successful, also because of weather conditions. The situation improved in the second quarter, and we expect that the next 2 quarters will show increasing volumes. Willi already mentioned that there is price pressure. The reason is that there are companies working in this segment and they exert local pressure. But I feel that things will smooth out over the coming years. So I'm quite relaxed in this regard. Both bricks, tiles and pipes made a positive contribution to our earnings, and we are on the right track. Outlook. We all get data from external institutions, and we have to rely on the Euroconstruct market forecast, but I would like to point out that they are always lagging behind in their forecasts and outlooks. The Wienerberger perspective is different. This shows you our view of things. We see that in Central and Eastern Europe there has been a decline in single-family houses in Poland, in the Czech Republic and in Hungary. The reason is, among others, that financing is difficult in these countries, particularly in Eastern Europe. The French market is also suffering. So because of the economic situation in France, the construction sector is under great pressure. And also there is the Dutch market with a loss of 17%. Germany is stable. However, developments have not been as positive as we originally expected. The reason being that the first half of the year was very difficult for the construction industry. This also applies to new housing starts. A positive example is the United Kingdom with a plus of 9% for new residential construction. North America, we view our business activities in the United States as local business. There are 4 regions: the Mid-Atlantic region, the Southeast region, Midwest, and the Mountain region. These are the regions where Wienerberger is active. We're not present in California or in Texas. We monitor market developments, housing starts in these regions. What is relevant for us and for our development in North America is the fact that there has been a 12% increase in new residential construction, positive development, so we have volume growth and improvements in some of these regions. Another important market is the renovation market in Europe. The roof business has been mentioned repeatedly. Weather conditions were very bad during the first half of the year, but we feel that there will be a catch-up in the second half of the year. So, let me sum up. Bricks and tiles. Here we had a very difficult start due to the weather. Then there was a return to normal business in the second quarter, but we couldn't fully catch up. And this, of course, meant that we couldn't compensate for the 20 million loss on operating EBITDA. And this will not be possible by the end of the year either. But what is important is that we, of course, have our plans to increase volumes and margins in the tile and brick business in Europe. Prices stable in Eastern Europe, positive development in Western Europe. So these are this will mean a very strong contribution from the roof sector. North America, volumes will go up somewhat in the second half of the year. because of delayed housing starts in the first half of the year. And pipes and pavers in Europe. Here we have a satisfactory, stable development in all three areas, Semmelrock, Pipelife, and Wienerberger. Let me also briefly touch upon the sale of non-operating assets. We clearly stated that we want to get about 10 million for asset sales for this year, 100 million by the end of 2016. So 3 million have already been realized in the first half of the year, and we expect to get 10 million for the entire year. A number of measures have already been initiated. These are mid or long-term projects which will extend beyond 2013, and we expect to have good projects in Europe, in Western Europe, in North America in 2014 regarding these sales. Restructuring. We have implemented our restructuring program according to plan. We focused on the Netherlands, Belgium, France, and Germany. Plants have been mothballed. We have reduced our overheads. We have shut down plants. All this has been according to plan. There were no major problems, and we will achieve the target of saving 18 million by the end of the year, and also reach our target values for 2014. And our team in the Bricks and Tiles division did an excellent job. Summing up, the Wienerberger Group, our guidance after the first half of the year, results from Pipelife were according to plan. We could not catch up with the impact of poor weather conditions, but overall the situation regarding prices is stable. We expect 2% cost inflation. Normal capex, well, as Willy said, we will step on the brakes, and normal capex will not exceed 115 million. We will focus on new innovative products. Depreciation should amount to 210 million, including Pipelife, of course. And as Willy explained, working capital will more or less reach the level of 2012. So this capital swing that he showed will be something that will have disappeared at the end of the year. Cost savings, 18 million in 2013, 50 million by the end of 2014. This, of course, requires considerable discipline on the part of the management in handling our day-to-day business. And we will take the necessary measures in order to reach that target. You've seen that we have responded very quickly to changing economic situations regarding working capital. We have, of course, had an impact on our EBITDA in the first half of the year, but we tried to make sure not to build up unnecessary working capital. So this, very briefly, was the development in the first half of the year. Wienerberger does not focus on one single product. Rather, we have a clearly structured approach: water management, pipes, new residential buildings, renovation. And with all these efforts, I think we will be headed for an interesting and successful future. Thank you very much.
Dank. Damit.
Thank you. Now let's have questions from the audience, and please make sure to use a microphone. A question relating to the working capital. You said this swing is normal. I think we all agree. Still, you've reached 3.6 times 2 the leverage, the deadline being June and the end of the year. So would you feel that extending the covenant to 4 times in order to avoid discussions with investors, which certainly will come up, people will be saying leverage will not change in mid-year. You will probably stay within this range in the coming years. So in order to sort of prevent this kind of discussion, what would you do? Thank you for this question. I think the 3.5 is something that we can be comfortable with. I told you that we have this under control. We know where we want to go. And you need to look at the actual business. I know everyone looks at the covenant, but if it's 3.49, it's fine. It's 3.51, we won't go bankrupt. So this is not an issue. It's a warning. It's a parameter. I know that some bankers probably are thinking, well, that there will be a discussion, etc., etc. We can think about a lot of things that we want to do, but it's important to manage our working capital, and this is what we are doing consistently. We did have a very harsh winter. We couldn't produce at the beginning of the year. Our plants were shut down. We started in a very difficult period where we couldn't sell anything really, and then we had the floods. Even though we were not directly affected, it had an impact on logistics, and we managed all that quite well. During our press conference, a question was, what happens when you have these huge fluctuations in temperatures or climate again next year? Minus 40 degrees in winter, plus 40 degrees in the summer. Well, if this is a new scenario, we will have to adjust and adapt to it. But I feel comfortable with what we are doing. We manage things, we know what we need to do, and there was no surprise for us, because our plans, in fact, proved to be right. So we had things under control, and there's no reason to panic. If someone, wants to use this in order to cause panic, well, we will definitely continue with our plans. This is only logical. Then I have a question regarding Poland. Here, Euroconstruct expectation and your forecast show the biggest difference. My question: what about the third quarter? CRH says that cement volumes are going up, or have been going up for weeks. And also, what growth do you expect for Wienerberger? You could win or gain market shares in the Czech Republic. Could you give us a figure for the total year, for the entire year? Well, adding to what Willy has already explained regarding covenants, etc., we all know that snapshots, of course, need to be considered with a certain amount of care. We're thinking in terms of overall results for the entire year, and we are taking the necessary measures, and I view this in a fairly relaxed manner, I would say. Talking about Poland, there are a number of figures that you cannot actually determine empirically. So these figures, of course, are relative to some extent, but our figures actually focus on single-family and two-family houses. And I think our figures are quite sound and solid, and they are in line with what other manufacturers actually see. The third quarter, fortunately, is not over yet. We stand in mid-August, so we had the month of July and 2 weeks in August. Wienerberger's business as a whole is according to plans, as we have tried to show you. Of course, the situation differs from country to country, but in Poland, in the Czech Republic, the countries that Slovakia that you have mentioned, even if the market shows a decline, we will use an offensive approach and we will try to position our products properly. So we do have clear-cut goals for these markets, volume goals, of course, and also goals in terms of revenues, profits and margins. But we've presented the overall results for the group. In your presentation, you say that clay blocks in Eastern Europe are more or less stable. Poland and Czech Republic, there's a lot of brick business there. There's not a great deal of roof business. So actually, you should have achieved growth in these countries. Well, we're talking about Russia. This includes Russia. Russia and Poland are the most important markets. The other markets are fairly small markets. Another question, Euroconstruct 2013. I think the forecast is overly optimistic. I agree with you there. They also have a forecast for 2014. I know this is still quite a ways off, but how do you view markets in Europe next year, particularly considering the promotions planned for Eastern Europe? Could you say something about what kind of development you expect there? And looking at North America, recently, interest rates changed. Or bonds with a 10-year maturity stand at 3%, so this raises mortgage rates, and this might have an impact on new buildings and new housing starts. Could you comment on that?
Well, if I may summarize very briefly, for us, that is the managing board and the rest of the company, we are focusing fully on the challenges for the rest of 2013. We're going to work hard on these issues. In my activity over the past 4 years, I've learned to understand that forecasts, be it for 1, 2, or 3 years, are being continuously revised. We have to manage our business in challenging times. We've succeeded in doing so. We have rearranged our group structure. There are just 2 of us, not 4 of us, as was the case a couple of years ago. Of course, we have our scenarios, but talking about developments in Poland next year, to be honest with you, I don't know. Who knows what's going to happen after the elections in Germany? We have our personal assessments, but we don't really know what's coming up in Europe. And we have to live with these changes day after day. The important thing for us to have a sound and future-oriented vision for our business. The earning strength of Wienerberger is still there. We still have very good margins in the brick business in Central and Eastern Europe. Of course, if the market were to improve, we would be the first ones to benefit from that. Financing capacities in these countries are an important issue. There is demand for housing in England, in Germany, in France, in Austria, and also in Poland and the Czech Republic, everywhere. So I'm not worried about demand. But it's sentiment in Europe and financing capacity. Talking about the United States, I wouldn't insist on being right all the time, but there was a lot of enthusiasm some time ago. Everybody expected things to go up, but we said it will take time. The American market needs a housing. There is the demographic issue. The foreclosure issue is showing signs of relaxation. And in the markets we operate in, as I showed you, we can see a sound curve moving upwards. People are beginning to earn money again. We are a clear market leader in a state like Tennessee. The Volkswagen plant has been set up in Chattanooga. Thousands of people are relocating there, and these are people who are building homes. They are our customers for the future. A basic business is developing there, which is not based on high leverage, but people have money again to build homes. Of course, for the big construction projects, interest rates will play an important role. But for the small business, I'm more relaxed. I do expect growth in the United States also for next year. The growth rate will be similar to this year. We won't have the dramatic growth rates others expect. So this is my position in August 2013. Talking about the half-year results, revenues and the operating result, you explained everything. The difference is due to the lower margin of Pipelife and the weak roof business. But one thing struck me, the difference between the result before tax and after tax. Through the higher Pipelife contribution from Scandinavia, higher taxes were paid, approximately 29%, compared with 10% in the second quarter of last year. What do you expect for the coming quarters? Do you expect a more stable result thanks to Pipelife? But will you be losing more because you have to pay higher taxes? Yes, absolutely. Because of the higher taxes, well, I prefer making a profit and paying higher taxes because there will still be €7 out of 10 that remain. If you assume the average tax rate of the second quarter, it's more or less a normalized figure. We are law-abiding Europeans. A question about the price structure in Eastern Europe. You said that prices were reduced. How did competitors react to that? And will prices remain low in the longer run? How much market share will you have to gain before you can say, now we can stop reducing prices? And a second question about the sale of non-core assets. You mentioned 10 million as your target for the full year. You will be able to sell assets above book value. Will those then be extraordinary effects in the income statement? Well, what we mentioned is proceeds equaling book profits. It was more or less the same last year. It might be a bit more than the 10 million mentioned, but it depends on a number of factors. The 10 million which we're aiming at, and it will be shown as part of normal EBITDA as in the past. So it's included in the 260, as we did last year in the 240. You put a question about our pricing policy in Eastern Europe. I know in the past many got the impression that Wienerberger is taking an offensive or aggressive approach. This is certainly not the case. We have a clear pricing policy. because we wanted to adjust to the market and to market developments. It's not just about competitors in the brick segment. It's also about competitors supplying other building materials. It's a very sensitive price policy. We fine-tuned our price policy depending on where we operate. We didn't say that we want to increase our market shares by so and so many percentage points. It's rather about having an efficient network, a modern network of plants, which we don't want to mothball. We work to a certain level of capacity in order to reach our optimum and to position ourselves in the market on a sustainable basis. We're not working towards a horizon of 3 weeks. We are taking a medium-term approach. What was the reaction of your competitors? Well, I'm not saying that we're not observing our competitors. They're doing their thing and we're doing ours. We are the clear number one in the region. And it's our intention in that region, which is a brick region. Hungary, for example, is a classic brick country. Housing construction has gone down by 22%. We have 2 sites which are very efficient, and we want to use these sites. And Wienerberger, as a brand based on Poroterm, is a strong brand in Hungary. And in the future, we will certainly have our say in the construction sector. So for us, it's a long-term approach. It's not something that is focused to the coming 6 months. We're rather taking a longer-term strategic approach. I'd like to put 2 questions, if you may. Could you give us some insight into the utilization of capacities in the individual segments? And perhaps you could also say something about if and how you are hedging your energy costs. And if so, what are the hedging costs? Utilization of capacity, we're talking mainly about the brick segment. Capacity will be utilized to a level of approximately 60% on average, which is more or less the same as last year. And you have to look at the full year for that purpose. You can't look at it on a monthly or quarterly basis. And energy costs, yes, we are hedging our energy costs. For the time being, we are deriving a benefit from the non-hedged part because energy costs have gone down in some areas. But for 2013, everything has been fixed. And the price changes are minimal compared with last year. So you've fixed everything that can be fixed. Let me come back to the proceeds from sales. So if it were included in the guidance, that would mean that at the beginning of the year, you would already have known what can be sold at what book profit. Can we take it as a buffer in your guidance, or was it clear already in January that you would generate a book profit of 10 million? Well, we hope to generate proceeds of 100 million by 2016. This is the first year of the program. Proceeds of 10 million is, well, if you want to call it a buffer, or it's something we reckon with on a firm basis, and this is why we included it in the 280 guidance then. If it's going to be more, we will report that. But that would be projects that are still under development. We can't tell you if it's going to happen next year or 2015, but the 10 million, you may consider that a given. Great Britain is this year's outperformer. Do you have enough capacity there? Is it a sustainable upswing, or is it a kind of a bubble? And what about the availability of bricks? And the same for the United States. Do you see any way for you to participate more strongly in this upswing? Interior walls, partitions, ceilings, would that be something of interest for you in the context of your merchandising activities? Now, first about England, I'm aware of the fact that the reports have been out that seem to point to a shortage of product. Well, if someone orders a product and doesn't have it delivered the next day, such reports may come up, but I can assure you that we're able to deliver the products that are wanted. We have enough capacities. Let me give you my personal point of view and take it as that. England is a country that is marked by the fact that the English are no longer building homes with their native labor force. They need workers from outside England. They need the Poles and the Bulgarian workers. It's an issue of the building industry. And then there are the professional home builders in England that have homes built. And for them, it's only favorable. If they talk about a shortage of building materials, I have read reports about concrete hollow blocks being delivered from Germany to England because none were available in England. This doesn't make sense at all. There is enough production capacity in England. There is no need for concrete blocks to be imported from Germany, which wouldn't make sense at all. Then the question about sustainability. How sustainable is this recovery? The British government launched the program, which triggered some investment and some capital expenditure, but I think generally speaking there is a more positive trend in England. After all, England is starting from a very low level. Up to 300,000 housing starts would be required, as we hear in England, and now we're at 100,000, 120,000. We are still far from the 200,000 the government has been calling for, so I wouldn't call it a bubble. There is enough capacity and enough demand in England. As regards the United States, the M&A activities you referred to, we have a sound structure, a good structure in the United States, which has a leverage from the operational point of view. As regards M&A activities, this is not the time for such considerations, and the multiples paid have almost reached the double-digit range in the United States. So expectations are absolutely unrealistic, and Wienerberger is well advised to build on its sound position here and not to do anything in the United States. So thank you very much for your attendance. I'd like to invite you to our Capital Markets Day on the 4th of September until 6th of September. It has a comprehensive program. The Managing Board will be there to present the strategy for the coming years, and the local management will give you some insight into the North American brick business. We are going to visit a showroom, a facing brick plant, and the national barbecue champion will be preparing the dinner for us in the evening. So if you want to register, please do so with one of our staff. Thank you very much.